Good morning, everyone. I'm Salvador Villaseñor, Head of Investor Relations, and I want to thank you once again for joining us in our live Q&A session following our second quarter earnings release, which was published yesterday evening. As usual, we will make every effort to answer as many questions as we can in the 45 minutes we have scheduled for this call. Once again, we kindly remind you to limit yourself to one question as a courtesy to others, please. Joining me today is Cristian Barrientos Pozo, President and CEO, Javier Andrade, our CMO, Pablo Garcia, our CFO, and Camilo Cañedo, our incoming CFO. Before going to the first question, I will leave you with Cristian Barrientos for his initial remarks.
No, thank you very much, Salvador. And I only would like to say thank you to Paulo for the last 5 years and all the contribution that he has done to Walmex, both Mexico and also Central America. And I would like to wish you all the best in this new chapter, Paulo. Thank you very much again. And you will have more time at the end to say thank you to all the communities. And I would like also to welcome Camilo for this new job and allow you to introduce yourself to all the community that are looking today.
Thank you, Christian. I'm truly excited to be returning back to Mexico. I was born and raised here, so this is both professionally and personally very meaningful to me. And I'm really looking forward, Christian, to work with you and the rest of the leadership team to create long-term value for our shareholders and our customers.
Thank you. Welcome.
Thank you.
Thank you, Christian.
Let's go to the first question, please.
We will now start the Q&A session. If you have a question, please press the question button in the browser. Please make sure you are not in full screen mode to see the button. The first question is from Mr. Ben Thoreau from Barclays. Please go ahead.
Hey, good morning. Can you guys hear me?
Yes, Ben.
Oh, fantastic. Works this time. So first of all, thank you very much. And Camila, welcome on board, and Paolo, to you, all the best on the way back to the old continent. Enjoy over there. Maybe our paths cross. Would look forward to seeing you, say maybe sometime in the future. So that's on that. Now, my one question really is just about the performance in Mexico and in very particular at Bodega, which clearly has continued to soften in the quarter. And I was just trying to understand, I would like to get some more details as to what are the short-term initiatives you are taking at Bodega in particular to drive a turnaround as it relates to the sales performance, given the softness we had over the last 2 quarters now. Thank you.
Yeah, thank you for the question, Ben. As you know, Bodega Aurrerá is struggling because of less traffic and smaller baskets. Mainly the impact is in Bodega Aurrerá large format and basically in food and perishables. Most of the impact is in the Zona Centro and Valle de Mexico, and we see customers splitting the basket in many retailers more than any previous time. We also see that this is an opportunity for us to double down on EDLP availability and on demand. So we are increasing the number of rollbacks to over 4,000 rollbacks, 90-day rollbacks to really help the customer save money. We're also re-engineering the pricing investments that we used to have in the past, and we are focusing more in elastic items and more affordability and specific private label baskets for Bodega Aurrerá with the Aurrerá brand. This is going to help us reinforce affordability and value for the customers. And also, we already started the SKU rationalization in Bodega Aurrerá formats to be more efficient, to help operators to really operate with less friction, and those savings are going to be reinvested in price again. Finally, I would say that on-demand is crucial for us because convenience is one of the levers that is changing customer behavior. So having the opportunity to go directly to their homes is going to be important. And we already started tests and learns in Bodega Aurrerá Express also with on-demand. So basically, we are going to be obsessed with the fundamentals of the business, but we are going to be re-engineering the investments we're doing to be more accurate and more specific now for low income and affordability strategies in Bodega Aurrerá.
If I may add to your question, because this is super important, Ben, because of how relevant is Bodega now in Mexico, adding to all the points that Javier mentioned, I would like to say that we are in the middle of the implementation of the mapping all the stores. We just finished the inventory located in all the stores in H1, almost 90% of the total stores, with really good results. The inventory accuracy improved more than 80 basis points. And also availability, as you know, allow us to have a better on-demand business. So we are seeing more than 400 basis point improve in perfect order. We're improving more than 300 basis point in on-shelf availability. And that is the customer is seeing that because we finished in June with the highest point in 12 weeks in Net Promoter Score. So we are seeing good results in that, both in availability, pricing, and also that reflect a better performance in the e-commerce business. So thank you for your question.
Thank you.
Thank you very much for your question. Our next question is from Mr. Alejandro Fuchs from Itaú BBA. Please go ahead.
Hola, Cristian, Paulo, Javier, Camilo, Salvador.
Hola.
Thank you for the space for questions. So first of all, I wanted to say thank you to Paulo, of course, for all the great conversations these years, and best of luck on the new journey. And now welcome to Camilo. Now my question to Christian and maybe Javier would be also on top line dynamics in Mexico, right? We're seeing a tougher consumer environment in the country, but when we look at performance per format on semester sales, it seems that the only format growing is Sam's Club, right? So these initiatives that you were referring to, when do you think we should start seeing them translating into top line growth? And how much of this maybe semester sales pressure is coming from economic activity relative to competition? Thank you.
Thank you, Alejandro. Very well. Very good question. And I would like to say that Bodega, as the big business, we are, as in the previous question, we are struggling with Bodega, both also in Supercenter, with a soft same-store sales. But we are very confident that we are making the right decisions in the business, particularly in something that connect with our purpose to save people money. So we are very encouraged because this is going to be the third quarter with a huge improvement in price perception. More than, as you saw in the webcast, we are finishing the Q2 with more than 310 basis points of price perception. We're improving a lot in availability. That is super important today, not only for our customer, but both for shopper and picker. And we are seeing impact in the OPD or on-demand business today. So we are confident on the action that we are taking, but it's actions for let me say, medium term, not particularly for long term, for short term. So when you move a company to really become a EDLP, it's maybe taking a little bit longer, but we are seeing in the old portfolio, because we began this journey, let me say 10 months ago, we are seeing, as you mentioned, good result in Sam's. Easy, let me say, maybe it's a smaller portfolio in terms of items assortment. So we are seeing a good result there. We have, in the other hand, something good in Central America, with 4 countries performing very well. We are seeing a turnaround in Costa Rica in last month, and particularly we are spending more time in self-service here in Mexico, but it's something that it will come, but it's not short term, maybe more in a medium term. I don't know if Paulo, if you
let me just maybe say on two things, Alejandro. You did talk about the macroeconomics. Maybe I'll just say three things on the macroeconomic there, and maybe just expand a little bit on Sam, since you mentioned that. I think that clearly there are a couple of things that we're seeing, and you all seeing that clearly the wage tailwind is starting to fade. We don't see that converting so much to the incremental consumer spending. Definitely to the point that Javier mentioned before, the consumers are actively rebuilding their baskets. They're actually looking to cheaper products and smaller packs. It's about affordability, entry price points, so that's relevant. Private brands become more relevant as well. And you all know that value and proximity / convenience are ultimately the reasons that are defining the shopping trips, which very much goes in line with the priorities that we define. If you think about EDLP, availability being an enabler, and then ultimately e-commerce, which is of course a way to drive convenience and also the proximity to the customers, we need to continue to double down on that. The results might not be immediate, of course, always. And I think I just wanted to have an opportunity to talk a little bit more about Sam's, given that you mentioned that. So you've seen the performance, and I want to say that probably comes from three things. There's one around the value proposition. With investing on pricing, we actually expanded price investments in 370 items across nationally. And actually for 60 stores, we actually are investing in pricing also in an additional 200 items. And that is already bringing more units in traffic. In Sam's, we already seeing the traffic in units improving. We're still not delivering that to the point of Christians in the self-service. Membership remains the key advantage. We are significantly improving our membership, which also comes as a revenue and in other income. And the renewals have been improving more than 300 basis points versus last year. And lastly, but importantly as well, we are pushing heavily in on e-commerce, and Sam's might have been the format that we have that has grown the most in e-commerce, with a growth of nearly 30%, with significant improvements in terms of the 2-hour delivery and same-day delivery, even more than what we're seeing in the other formats. So I think all that compounding, and that's what we think that we can be able to and must do as well in the rest of the other formats. Thank you, Alejandro.
Super clear. Muchas gracias, Cristian, Paulo.
Thank you.
Thank you very much for your question. Our next question is from Mr. Froy Mendez from JP Morgan. Please go ahead.
Hello, gentlemen. Thank you very much for taking my question. You hear me well, right?
Yes, Froy.
Excellent. So the revised guidance implies a significant acceleration in second half of the year. When we look at the results in the second quarter, a lot of the performance seems to be somewhat cyclical, related to the World Cup, given the performance in Sam's and Supercenter. What are you seeing, or what are you counting on to go right in the core banner Bodega in the second half for you to have confidence to reach the new guidance, the top line?
So let me just clarify something on the guidance there, Froylan. And by the way, thank you for your question. We provided the guidance it's in constant terms. So that's not always the discussion around, is it reported currency or is it constant terms? If we put it that way, there's an acceleration, but not an unmeaningful. So we're taking a conservative stance. From an economic standpoint, we do not expect a meaningful acceleration in the second half. And we decided, of course, to provide guidance to you and the rest of the market in order to provide transparent expectations from what we are seeing. I will also like to say that we actually have not seen much from the World Cup, Froylan, in the quarter two, and in particular in June, July. There was, of course, an uptake in a few categories, as we all would have expected, in particular in snacks and beverages, but probably more in other sectors and channels that necessarily with us. But as you know it, and everyone knows it, ultimately the impact of the World Cup was not for Mexico, but one that we were all expecting. So that's what I would say at this stage, Froylan.
But let me just follow up there. this on-demand initiative in Bodega, does that have to really take off in the second half for the thesis to be there to see a better second half? Even it's not a significant acceleration, but is that key for Bodega to improve in the second half, or that will take longer?
Yeah, we are confident in our ability to deliver the guidance that we submitted to you. So let make me that clear to you. So we are confident in deliver the guidance. That assumes, of course, we need to improve to the point of Christian, I said it before, in the self-service, particularly in Bodega, but also in Walmart. And we believe there's also a lot of continuous acceleration that we can keep on with the SAMs. And then we are already seeing the early signals that in Costa Rica, the things are improving. We are looking at July with the comp sales much better than what we've reported. June had already been better than the rest of the months. It's fair to say that we're also cycling a lower comparison in Costa Rica now, given what we had last year. So we do see an improvement that going forward, and we feel confident that we can deliver the guidance that we submitted to yourselves.
All right. Thank you, Paulo, and good luck in your next endeavors.
Thank you very much.
Thank you.
Thank you very much for your question. Our next question is from Mr. Bob Ford from Bank of America. Please go ahead.
Hey, good morning, guys, and thanks for taking my question. Can you address your seller onboarding times and processes in comparison to Mercado Libre, and maybe touch on the key friction points as well as how we should think about the timeline to remedy those? Thank you.
Thank you, Bob, for your question. Yes, we're improving seller onboarding in the second quarter, sorry. This is part of our seller value proposition we are working on that maybe I can separate have a better proposal for them in Walmart Fulfillment Services that we are seeing a really good improvement. We moved penetration in Walmart Fulfillment Service from 32 to 43. We're seeing good results also in same day and next day penetration with more than 260 basis points. And as you mentioned, seller onboarding process for us is something crucial to improve our assortment proposition, but not only for having millions of items, but we call the in-demand items. We are working very hard to improve the in-demand items, and the seller onboarding process, it's crucial. So we saw in the Q2 important reduction from 35 days to 17 days. So that is something that is improving, and we are working for in the next quarter to reduce a little bit more, close to 10 to 12 days, this onboarding seller process. So with that, we are confident that we will have the correct assortment and the in-demand assortment that the customer are looking for.
If I can just build on Christian, Bob, you are asking for what we are seeing overall as the points of friction. Christian already alluded to some. So definitely seller friction, seller onboarding is one. We've been acting upon on that one. The assortment, to the point of Christian, is another one. It's both in terms of depth and breadth of assortment, but more important, what Christian was talking about, in-demand items. So the items that the customers really want, we have that identified. We know that's 1.7 million SKUs. We have only a short part of that. So that's where we are putting all our effort, because we need to put the assortment that the customer wants before we think about the tail. And the third one, where we still have a friction when we compare with Meli and other competitors, is around the tech stack, around the search engine and personalization. We are working extremely hard on that. Just on a positive note is, as you know, Global, or probably some of you will know, not sure if you will know, Bob, in particular, our marketplace team now reports to Global, which is handing in a way to get the US best practice a lot faster to the market. It's a priority across the globe, across the enterprise, the marketplace, and we believe that the things will expedite going forward in order to close the gaps that we have against some of our competitors. Yeah, thank you. Let's move to the next question.
Thank you very much for your question. Our next question is from Mr. Andrew Rubin from Morgan Stanley. Please go ahead.
Hi, thanks very much for the question. I'm curious if we think about the other part of the guidance on expenses. It seemed like specifically in Mexico, the operating expense control was a bright spot in the quarter, but you kept the high single-digit growth. So I'm curious as we think about the back half, that bridge with run and grow expenses, any areas where you expect to lean in a bit more to the grow versus the balance of ongoing efficiencies in the business. That bridge would be helpful. Thank you.
Yeah, thanks, Andrew. And indeed, we always said it that you know this, that investments and expenses will not always be linear quarter on quarter. So we'll continue to do our investments in growth along the lines of the ones that we've been doing so far around stores, around, of course, the remodelings of the new stores, remodeling of the stores, the e-commerce, logistics. So I think you can expect a tiny bit more in the second half than what we've seen now in the quarter two, but you can expect us also and from us to continue the financial discipline to control, pushing very hard on efficiencies, continue to drive automation that allows us to drive productivity not only in the stores but also in DCs and also in the staff. And as I said, and we also put it in the webcast to Andrew, we continue to expect our SG&A to be pretty much around the high single-digit growth in constant terms. So, but count on us to continue to translate these efficiencies the best we can to the P&L with the discipline that we showed in the quarter two.
Okay, that's clear. Thank you, Paulo.
You're welcome.
Thank you very much for your question. Our next question is from Mr. Joe Thomas from HSBC. Please go ahead.
Good morning, gentlemen. Can you hear me okay?
Yeah, sure, Joe.
Great. Thank you. Thanks for taking the questions. I had a couple of questions, please. First one was on Bodega Aurrera. You've talked about the weakness being in big box. I was just wondering if you could perhaps price things apart and give us a sense about what's going on in small box Bodega Aurrera. And the second thing was you made some interesting comments about private label. And I'm just wondering what your intentions are and expectations are for the private label business. Thank you.
Thank you, Joe. I'll start with private label. That's a very crucial part of the strategy for us. So we're improving 90 basis points versus last year, and our target is to hit mid 20% share in the different businesses that we have. One of the things that we're doing now is strengthening our relationships with suppliers through global sourcing. So as Paulo said, with Marketplace, we're also working closely with global sourcing to make sure that we have the best sourcing cost and availability process for our private label. The other thing is we are seeing different behaviors from the customers, and we are understanding that there are some white spaces in smaller formats and entry price point items. So basically, we are reconfiguring the portfolios of private label as we speak. And also, I think that one of the things of private label that is going to be important for us is that we just started implementing in our modulars a different strategy, getting to up to 25% share in the modulars with our private labels, reviewing quality, price, value, packaging. And we are sure that this is going to bring stickiness to the business, particularly at the beginning in Bodega Aurrera, but total formats, including Sam's, that it's doing a very good job in private label, is going to be driven through value proposition, quality, and leveraging with the US. I am confident that we're going to be accelerating fast, and part of the reconfiguration of the portfolios and the modulars is going to be based on improving private label share in every category and every business.
And Joe, on the second question on buy Bodega Aurrera Express, we continue to see they're performing well. They're performing well across all the regions of Mexico. And we have had a performance relative with the competition that is doing well. We always looked at the market shares doing good. So as Christian and Javi said it before,
we're releasing more is on the big bodega because the customers are splitting their shopping. And of course, they tend to buy the smaller tickets and the smaller baskets in the other parts, sometimes also moving to the informal market. And that's why we need to double down on those three priorities on the EDLP, availability, and e-commerce to continue to stay relevant on that particular format.
Thank you very much.
Thank you, Joe.
Thank you.
Thank you very much for your question. Our next question is from Ms. Renata Cabral from Citi. Please go ahead.
Hi, everyone. Thank you so much for the space for questions. Paulo, it has been a pleasure working with you. Thank you so much for being always approachable, thoughtful, and open with us analysts. Wishing you all the best in your next chapter. And welcome, Camille. Looking forward to working together with you and wishing you all the best. So my one question is on inventory and availability. The inventory optimization is one of the biggest positive highlights here. That I see the reduction in days. So my question is that it's mentioned in the releases still big opportunities to further reduce days. Could you give some color on where do you see those opportunities, if it's possible to quantify or to have a horizon in time, for instance, 12, 24 months or so, to understand the horizon of these possibilities? And if it's reasonable to expect that with the inventory improvement, this working capital to become a more important contributor to cash flow over the next few years.
Thank you, Renata, for the question. I'll start sharing with you some things about days on hand. That's a top priority for us, and we want to do a structural change because, as we said in the release, even though we're reducing days on hand, we're improving availability in every category and in every format. So basically, the structural change is rebuilding the portfolios for each of the banners and making sure that we have the right proposition for each of those banners. Now we see the opportunity going forward, specifically in Bodega Aurrera, with the SKU reduction that we are planning to do for the future, and trying to reduce the overlap that we have with Supercenter and making sure that we have the right assortment with the right items and covering the white spaces that we need to cover in Bodega Aurrera to be relevant for the customers in this new way of shopping that they're splitting their basket. The other thing I would say is that we're working closely with suppliers to make sure that we have very good modulars that are going to be replenishable, and it's going to be everything pickable, and it's going to be easier for the operators and the shoppers, pickers to really find the products. So the other thing that will reduce days on hand is better discipline in the purchase, but also accelerating on demand and accelerating sales through an easier and better experience for customers, shoppers, and pickers. So moving forward, we are expecting, and the only one that we are sharing now is Bodega Aurrera Express. We're aiming to reduce like 30-40% of the assortment that we have now in the upcoming months. And then we will start the process with Bodega Aurrera and Mi Bodega. But basically, the idea is to make sure that we have better availability, better shopping experience for customers, for pickers and shoppers, while we reduce days on hand selling more.
I wanted to say thank you, Renata, because days on hand is crucial for our retail business, and it's crucial for our multi-format business that we have here in Mexico. But we think that is more to come because we are touching the correct priorities. For example, everything begins with assortment. As Javier mentioned, we are focused in trying to have the curated assortment in all our banners with a correct assortment. And as I mentioned before, with this mapping store that we are doing right now, beginning the first half of the year, that is showing very good result in terms of inventory accuracy, and we will be mapping and finish this rollout in the second half in GM and Fresh, allow us to have this visibility on inventory that is crucial to have a better days on hand. And sooner we will be open 2 big distribution center in Bajío and Tlaxcala that allow us to have a better combination between staple stock and cross dock. So we will be offering to our stores less inventory, so they will become more efficient, and also we will see some positive impact in the working capital issue. So this is let me say in a summary, the flow that we are looking or planning for the future. But this is a great question and super important for us. Paulo?
Yeah, just say, I know, Renato, you'll be looking for a number. I think you're asking the question. And we talked about that in Womex Day, but I can just reiterate that we do see an opportunity for a reduction up to 10 days in days on hand in the next 3 to 5 years. So actually, we still aim higher, but that's what we are committing, and we have talking to the market, and count on us to do that.
Amazing. Thanks so much for the comprehensive answer, guys.
Thank you, Renata.
Thank you.
Thank you very much for your question. Our next question is from Ms. Irma Scars from Goldman Sachs. Please go ahead.
Yeah, hi. I don't want to be repetitive, but just I think Renata said it so eloquently. Just said to echo exactly the same comments that she made. So thanks, Renata. And thanks, Paulo, and welcome, Camilo. I just wanted to follow up on a question on gross margin. Continued good progress, I think, very consistent with, Paulo, what you've explained to us over the years in terms of contribution from the new businesses, and I see they're right now being reinvested into obviously your value proposition, your price gap. How should we think about that for the remainder of the year? Should we do you see sort of a need for further price investments here, or do you believe to have reached a good level? So more consistency of what we saw exactly in the second quarter, or something different. And then one other sort of moving away from the gross margin, but going back to the private label topic. I was just curious, sort of, if you can talk a little bit about the work you're doing with suppliers, not just sort of tapping into the global supply chain and global sourcing channels with Walmart, but even sort of locally, when you think about sort of national brands, etc., at a time where you're also bringing in more private label, and just help us sort of understand how those conversations are going, and any impacts to the business that we should think about. Thank you.
Thank you for the question, Irma. I'll start with private label. Even though I commented that we're going to work closely with global sourcing, we still have a lot of business here in Mexico with local suppliers. And what we're doing is we're approaching like a long-term agreements with them, and we want to build relationship based in trust, and trying to find as much efficiencies as we can with them, going through the total chain and the total process in design of the products to be very, very efficient. Honestly, there are a lot of great suppliers in Mexico, and we are working with them to accelerate our business. Said that, the other thing is we are improving our price position in Mexico. As we said in the release, we increased at least 10% price gap versus national brands, and we're going to be very, very aggressive in that approach in specific items and baskets, because now the customer wants more affordability, and we need to help them really, really save money and live better, and making sure that we get the traffic from those investments that we're doing. So the idea of global sourcing is going to be more to standardize processes and leverage cost as much as we can. But even we are working with suppliers in Mexico to give them access to other countries, so we can really have the best value possible for each of the private label items that we will design with them. And also, we're reviewing the core assortment that we have now. It's not going to be just new items. We are reviewing every item in every category with suppliers and global sourcing to make sure that we give them the opportunity to access other markets, and also giving the opportunity to the customers for better cost, better prices, and more value for them in private label.
And just on gross margin question, I think, Irman, our priorities, EDLP is one of them. I think you can expect us to continue to investing in pricing, but there are ways to invest in pricing. Javier talked about the re-engineering that we are doing to put the emphasis in terms of the pricing investments in the price elastic items. So that means that you're investing better, you sweat your investments in a better way with more returns. So that sometimes might mean different things in terms of what's the gross margin output. I think what I want to reiterate, you started by talking about that, is we are different than the rest of our competitors. We do have the new business, or what we call now newcomer solutions, that can help us to drive the gross margin profitability and decide to invest that money in pricing if we wish. I think you can expect us to continue to do so, but doing in a smart way, also in collaboration with our suppliers.
Understood. Thank you.
Thank you, Irma.
Thank you very much for your question. Our next question is from Mr. Antonio Hernandez from Actinver. Please go ahead.
Hi, good morning. Can you hear me?
Yes.
Perfect. Thanks. Well, congrats, Pablo and Camilo. Just don't want to be that repetitive, but congrats as well. Just a quick one regarding competition and maybe your progress and your growth plans. Are you seeing some regions as priority here in Mexico and maybe some others that perhaps because of competition or macro conditions are not as priority? Thanks.
No, we Antonio, as you can expect, we want to win in every region. And if you're talking about, is there a particular region that is growing more or less? As you probably know, the Southeast is actually a little bit more impactful. One in the past there was a bit of tailwind, now is a bit headwind, so to speak, and the North growing well. Regarding competition, we see competition strong across the country. The usual players. Some are stronger in certain areas than others, like Chedraui more in the south. You have this 3B more in the center, and then you have HGB in the north. But I think ultimately we're looking to the competition all equally. And the two pockets of where the competition is attacking the most, we've discussed that a couple of times. You're seeing the pure players, mainly Amazon and others, and then of course on the proximity front. We tend to talk about 3B, but it's a lot more than 3B. It's all that is opening around the proximity side.
Okay, thanks for following.
Thank you.
You're welcome.
Thank you very much for your question. Our next question is from Mr. Alvaro Garcia from BTG Pactual. Please go ahead.
Hi, gentlemen. Paulo, all the best going forward. Welcome, Camilo. Thanks for the space for questions. I have two questions. One on Central America, pretty significant sort of gross margin investment this quarter. And you did mention that sort of June got better, July was that much better. Is that a function of that gross margin investment in Costa Rica? And to what degree is that here to stay for the rest of the year? My second question is on Bodega as well. You mentioned sort of SKU rationalization for the big boxes. If you could just walk us through a timeline of when you might expect to see that happen, and to what degree is SKU rationalization impacting sales today? I mean, you're literally selling less stuff. That would be helpful to get context on. Thank you very much.
Thank you, Alvaro. I will begin with Central America. As I mentioned before, we have seen a great result in 4 countries, except Costa Rica, as we talked in Q1. In Q1, we had some issues with a conversion on a perishable distribution center that we are seeing right now, a huge improving in terms of availability this quarter, particularly at the end of the quarter. We are seeing a better result Q2 versus Q1, but particularly, as I mentioned before, June, and we're seeing a good recovery in July, coming mostly because of the availability process that we implemented. We'll continue seeing a deflation in the market, but this is affect to all the competitors too. But we drop a little bit our margin in terms of our plans, and our guidance. We continue to invest in some areas to be more competitive against top competitors in Costa Rica. But more to come because we had deflation in some areas. We had deflation in eggs, in rice, and we are working to managing all these expectations for the customer and try to control, of course, the profit. But very confident on the action that the team is doing there. And we are seeing, as I mentioned before, a good recovery, particularly at the end of the quarter and beginning of the Q3. And in Bodega, we cover a lot of things about Bodega, going through inventory that is good, on demand, and particularly in assortment. I would like to Javier to deep dive on that.
Yeah, thank you, Alvaro. And one interesting thing is that we're not delisting items to sell less. Everything is to sell more. So basically, we are building the right assortment and the relevant assortment for the customers. So basically, we already started and we will see progress in the upcoming 12, 18 months. We need to get rid of the inventory that we have of the delisted items that we are going to be taking off the modulars. But basically, the idea of this is to have more efficiencies in the stores while we sell more and less days on hand so we can reinvest in price. So everything regarding SKU rationalization in the 3 Bodega formats is going to be efficient and so we can fund more price investments. The other thing is we're going to be covering white spaces that we currently have and basically reviewing all the market and the customers, understanding more convenience, proximity, and seeing with the data that customers are trading down in sizes, there are some opportunities for us to cover some white spaces. So everything we're going to do in assortment is going to be to sell more, be more efficient, and have the ability to invest more in price.
Maybe just 2 quick builds, Alvaro, on Central America. One, because I know a lot of people are asking a question around that. You may have seen the numbers on private brands on Central America in reduction. A lot of that is the mix, is the Costa Rica. It's actually because Costa Rica is reducing, while the other countries are actually all going up. And in Costa Rica, to the point of Christian, we have lots of commodities, eggs, rice, and beans, extremely big or relevant in Costa Rica. This all is all private brands, so that the deflation tends to impact. I think just for you guys are not worried that that's anything structural in terms of what we're doing on private brands in Costa Rica. To your point on the margin, yes, some of those investments are also translating already in improvements, but we also need to get our act together to the point of Christian and managing better the price investments and to getting the returns and collaboration with suppliers.
Thank you, Alvaro.
Thank you very much.
Thank you.
I think we are done with all the questions. So just may take the opportunity to say, to me, it's one, thank you everyone on the call. So first of all, thanks for all the flattering comments from all of you, analysts, and for attending today the call. But also wanted to thank everyone in the call, all the investor communities for all these 5 years. And I look forward to my next chapter, of course, but I very much believe that Walmex is a huge opportunity going forward. And I wish the best of success to my successor, Camilo. And I'm sure you'll do extremely well, as well as the rest of the company. Thank you very much.